What's going on? Alex here, and today I'm going to be talking about the Section 179 deduction. Now, this is a provision in the tax code that allows businesses to write off up to $1 million in assets that they purchase and place in service in a particular tax year. So first, we're going to start by getting some background on Section 179. Then we're going to jump into a tax return to run a few different scenarios that I've put together to see the deduction in action. So before we get started, a quick note. Depreciation can get very complicated very quickly, and the point of this video is to keep things very simple and just scratch the surface of what Section 179 is all about. So definitely consult with a tax professional before acting on any of the information presented in this video. So what's Section 179 all about? Now, as the name would imply, the provision is based on Section 179 of the Internal Revenue Code, and it was enacted as a form of stimulus for small to medium-sized businesses, more on that later, for them to make investments in assets that they purchase for business purposes. So if they purchase an asset and place it in service in a particular tax year, Section 179 may afford them the ability to write off that investment instead of having to depreciate it over time. So let me back up. Let's say Section 179 didn't exist, or any of these other provisions like bonus depreciation didn't exist. Traditionally, depreciation is done over time. So the tax code specifies that for certain assets, you need to depreciate them or write them off over a certain number of years. So as an example, if you were to purchase a $100,000 piece of equipment for your business, you typically would not be able to write it off all at once using the traditional depreciation rules. You would have to write it off over a number of years dictated by the tax code. So for example, a lot of machinery and equipment is depreciated over 5 years. So if you purchase an asset for $100,000, you don't get the deduction up front for the $100,000 using the traditional depreciation rules. You would have to space it out over a number of years. Now, it may be advantageous for a particular business if they have huge net income in a particular year and they're making all sorts of investments in capital assets to take on a lot of those deductions, as many of them as possible in that year. So with that, Congress put their heads together and said, hey, one form of stimulus that we can provide is to encourage businesses to make investments by allowing them to write off all of the purchases that they make from a capital asset perspective in a particular tax year. So that's how Section 179 and some of these other provisions came about, in that Congress essentially allows businesses to accelerate that depreciation that they would have had to space out over a number of years to a single year. So in some cases, you may be able to purchase a $100,000 asset for your business and write off that entire $100,000 amount to reduce the net income for your business, which would be subject to tax. So obviously that becomes very attractive, because if you are buying a $100,000 asset and it's creating a $20,000, let's say, tax benefit for you in terms of the write-off, and it all happens in 1 year, let's not forget, then it really knocked your price down to about $80,000 if you want to look at it that way. Now, there's 1,000 ways to do this analysis. I know discounted cash flows and time value of money and all that. But ignoring all of that on a very basic level, the point is to provide an incentive for businesses to make investments in assets by allowing them to accelerate their write-off and to take it all in a single year or in a few years, as we'll see later. But that is the basic idea behind Section 179 and other provisions like it that allow for accelerated depreciation, like bonus depreciation. Now, I'm not going to cover bonus depreciation in this video, but I will certainly release another video that focuses on that provision exclusively, so look out for that. Now, one of the important things to keep in mind when you think about the Section 179 deduction is the limit that's applicable to a particular tax year. And this limit has changed multiple times over the last few tax years. Let's take a look. So if we look here at this report by our friends at the Congressional Research Service, we can see that the tax year is shown here. Then we have the maximum expensing allowance. This is the upper limit for the Section 179 deduction shown here. Okay, and then the investment limitation I'll get to in a second. But you can see that over time, that deduction has increased quite dramatically. I mean, it started in 1987 there for $10,000, and it went all the way up to, in 2018, to $1 million. So there's a huge jump in the amount of the allowable expense, and essentially Congress is trying to stimulate more investment in assets by businesses, and this is one way that they're doing it. Now, we talked about the investment limitation, and I mentioned at the beginning of this video that this is applicable to small and medium-sized businesses. The reason I mention that is because if you purchase and place in service over this limitation in terms of the amount of assets or the cost of the assets, then you are not allowed to take the Section 179 deduction at some point. So it's really important to keep in mind that if you're, let's say, Microsoft or Apple, and you're acquiring millions of dollars in assets every single year and placing them in service, that Section 179 is not even going to be available to you because it's specifically tailored to smaller and medium-sized businesses, hence the investment limitation. So the maximum expensing allowance applies to the top limit of the Section 179 deduction that you can take in a particular year, and the investment limitation has to do with the total amount of assets that you purchased and placed in service within a particular year. The way the investment limitation works is as follows. So we can see that in 2018, the investment limitation is $2.5 million. So what that really means is that that's where the phase out begins for the $1 million 179 deduction that you could take in the year. So if, for example, we had $3 million in total assets that we purchased and placed in service in a particular year, then this $1 million will be reduced to $500 because, again, it's a dollar for dollar reduction for every dollar over $2.5 million of assets that you purchased and placed in service in that tax year. Now, likewise, at $3.5 million, being that it's 2.5 plus the 1, if you purchase and place in service $3.5 million of assets or more, then your business doesn't qualify for Section 179 in that tax year at all. It's not available. So that's why companies like Microsoft and Apple, they don't take Section 179 very often because their investment amounts can be in the billions of dollars. So certainly much more than is afforded here. So that's why at the beginning of this video, I mentioned that this is more for small and medium-sized businesses, because if your business grows above the point that you're purchasing and placing into service more than $3.5 million in assets, then you don't qualify for Section 179. Now that we've talked about the applicable limitations, the question is, where do you actually take the deduction? It's a great question. So that all happens on beautiful Form 4562, and you can see here in Part 1, there's the election to expense certain property under Section 179. And as you go through this tax form, you are going to be able to calculate the applicable deduction for a tax year that you're working in, and also any applicable carryover, which I'm going to show you in a second. So this is where the magic happens with regard to Section 179, so I want to show you that. Now, we're going to go through a few scenarios where you'll see this form in action a little bit later, but I just wanted to give you a background as to how you take Section 179. Now, it's important that if you forget this form, essentially, you haven't taken Section 179 because it's one of those deductions that's available to you if you elect to take it. It's not something that happens automatically on the tax return. So I've seen cases where taxpayers have intended to take Section 179, but they haven't filed this form, which in essence means that they haven't taken it. So it's important to make sure that if you are taking Section 179, that you're including Form 4562 along with your income tax return if you're filing Form 1040. Now, with that said, let's take a look at a few different scenarios to see the Section 179 deduction in action. So over here, we have the tax software. Now, keep in mind that we're going to be using the 2018 software because the 2019 software hasn't come out yet, but the Section 179 deduction isn't really changing from 2018 to 2019, so it's still going to give us a good idea that we can apply to 2019 as we look at these multiple scenarios. All right, so let's just take a brief look here just to get a lay of the land. Now, the first scenario just takes a look at a taxpayer who has no wages, and they have Schedule C gross income or gross receipts of $100,000. Now, they didn't purchase any equipment, they didn't place into service any equipment throughout the year, there's no Section 179 deduction, and the net income from Schedule C is going to be $100,000. So this is the baseline scenario that's going to allow us to compare these other scenarios to it, just to see the differences that come out. Now, in scenario 2, we have Schedule C still at $100,000, nothing changed there, wages still at 0. But now we're purchasing and placing into service $50,000 of qualifying Section 179 property. Now, what is qualifying Section 179 property? That's another great question. Essentially, Section 179 allows you to deduct upfront machinery and equipment that you purchased throughout a particular tax year and place in service in that tax year as well. Now, there's also some provisions for off-the-shelf computer software and also some improvements to real property, but those get very nuanced. So the point of this video is to keep it extremely simple. So in this case, let's just assume that it's average run-of-the-mill machinery and equipment that's being placed in service. Nothing too exotic, because the point here is to just keep this simple, all right? Now, let's assume we have $50,000 in qualifying 179 property. Then we elect to take that deduction because, again, it's up to you how much Section 179 you want to take in a particular year. And then we get a total deduction of $50,000, and that gives us net income on Schedule C of $50,000. So notice that the Section 179 deduction is allowing us to decrease the net income on Schedule C, which is also going to reduce our self-employment tax, right? It's going to reduce income taxes, but also self-employment taxes. So that makes it particularly attractive. In scenario 3, we have similar situation that there's no wages. The gross receipts on Schedule C stayed the same. The cost of equipment purchased and placed in service, though, is $150,000. So notice what's happening. We only had income of $100,000, but we're purchasing and placing in service $150,000. So what happens there with Section 179? Do we get to deduct all of it? We'll take a look, and I'll explain it in a second. Now, similarly, we'll elect to take all of the Section 179 on that in this scenario, and you'll see here Section 179 deduction carryover to tax year 2020 is going to be $50,000. I'll explain that a little later. Just bear with me for now. In scenario 4, a lot has stayed the same, except now I've added $100,000 in wages, which I'll explain a little bit later. And everything else basically stayed the same, but we'll go through the changes that occurred here, especially in the carryover. And in scenario 5, we're going to take a look at yet a different scenario where we purchased and placed in service $150,000 of machinery and equipment, but we only elected to take $100,000 in Section 179. And I'll go into the thought process behind that in a second as well. So those are the 5 scenarios that we're going to examine, just so you could see the amount of flexibility and the different effects that Section 179 can have.